talk about HDFC Bank on the takeaways of their analyst day. Now, they're saying that they're pretty comfortable about the liquidity as well as the LCR situation. The NIM guidance, they're saying is going to fall by 25 to 30 basis points, saying that they took a hit on investments in Yes as well as Bandhan, and the investments are M2M, that's mark to market. Harmonization, they said, is done with regards to their Opex, and margins will rise by 25 to 30 basis points once liquidity actually falls in the system. Let's take on board Sameer Bhise then and try and analyze what's been his takeaway from the analyst day. Sameer, hi, morning. What, according to you, were the key highlights from HDFC Bank's analyst day? And I'm guessing the NIM guidance, the fact that they're expecting a fall by 25-30 pips, does that come as a surprise?
Yeah, hi, good morning. Thank you for having me on the show. So I think 2-3 pointers which probably market was not factoring earlier was obviously that the opening net worth of HDFC Limited is a tad lower than what most people expected. So to that extent, your starting point of net worth is a bit lower than what you thought. And also the margin drag with respect to the liquidity buildup that you had in run-up to the merger, which is 1st July 2023, is quite sizable. So that may have a further impact on the merged entity margins. And as is the case with such things, it usually takes 2 to 3 quarters for things to normalize. So near-term margin performance could be a bit subdued. So I think these two factors can just impinge on near-term performance is what we think. Though all said and done, HDFC, the franchise, obviously nobody doubts the quality of the franchise. This kind of turbulence is kind of expected with the merger of this size and this scale. Though near-term numbers could be subdued, I can't deny that, yeah.
Sameer, the fact that there would be a pressure on margin is something which the management has communicated. And the fact that the stock is underperformed, don't you think markets are already pricing this kind of a scenario?
See, I think one has to look at it in context of what's happening in the sector. I mean, we've had a nice 4 quarters run in other banks with respect to expanding margins when RBI was hiking rates. Other banks have now entered a territory where margins are kind of getting softer given rising cost of funds, but they are getting softer on a highly elevated base, which you saw all through FY20. Unlike HDFC Bank, wherein probably the expansion was not so high and now it's getting compressed without having expanded. I think that is where there's a bit of a hiccup. And obviously, if at all we enter a rate-cutting territory next year, then obviously it's an entirely different ball game. So I think that is where the anxiety is with respect to margins. So I think in the longer term, only 2 things matter, which is growth and asset quality, wherein obviously they sound quite confident. So I think it's a time to take a slightly 1 year plus view rather than get bogged down by what's happening on an extremely near-term quarter-to-quarter basis, because it's a big event in the life of the organization, and there are many moving parts which will take some time to settle down.
Cut your price targets. Do you expect some underperformance in the stock in the near term, Sameer?
Yeah, so I think as Nikunj said, the stock has been sideways for some time now. I think from people who really want to take a medium-term view, like almost 18 to 24 months, I think HDFC Bank doesn't get cheaper than this. Near-term, yes, can't deny a bit of a sideways movement is likely given how numbers could shape up. But obviously, from a medium-term perspective, our fundamental view remains positive. Our target price is 1850. We haven't made any meaningful changes to our APS estimates basis this, because we were slightly already factoring bit of some of these disclosures. So I think that is where we are.
All right. Thanks so much for taking time out. That's Sameer's view, saying that perhaps look at it from a slightly long-term standpoint and not on a quarterly basis. But that's the view on HDFC Bank. Let's shift gears.